Hi, this is Randy Finney with the Right Side of the Chart, and this is a early session update for Wednesday, June 5th, 2019. I wanted to do this video. There's absolutely zero new developments in the market since last night's update, especially since this morning's pre-market update, or that may have come out right after the open, but that was just a follow-up to the levels last night. Just something I want to get out there and say, and I say the same things over and over, but there's always new people coming into the site. Some things get lost. Is a couple things. Number one, during correction phases in the market, things move fast. Trading a correction or bear market is simply like trading a bull market in fast forward. That's the best analogy I can come up with. This is, talking about a bull trend. This, things go up and down, and you can buy dips, and there's usually a lot of opportunities to buy pullbacks. You gotta be a little more quick in a bear market. Why? Because when you finally hit support levels, that the correction or that leg down in a bear market ends, the reversal is usually fast and furious because you don't just have dip buyers like you do in a bull market on the pullbacks, but you also have a lot of short covering as well. So you have people coming in to buy the dips, longs that want to buy, and then shorts. So now where I'm going with this too is define your trading style. I say this often. I've been very, very clear on my longer term and intermediate term views where I think the market's heading. These 60-minute charts, these frequent updates I'm doing, long, short, pullbacks, that is for the active trader. And if that is not your cup of tea, then probably best to just keep your core trend positions, swing positions, and not try to micromanage or game all the little rips and dips and zigs and zags. I mean, that's what I do as an active trader. I know a lot of you guys on the site do that as well. A lot of you like to do it. So I'll point out these levels, day in and day out. And the thing is, the markets are so dynamic, rapidly changing, especially in a correction mode, that it'll make your head spin trying to keep up with the levels. And I can tell you this too: it also takes a while to mock up these charts, even to get them out, the static charts. By the time I screenshot, analyze everything, look at try to make sure all the levels that I'm looking at, like for example QQQ and SPY, I want to see that those aligned like they did today, and then I posted that right after the open. These are the targets that the next targets after the trend lines that were posted last night: 282.40 and QQQ 176.74, which I believe I said in the video I expected them to be hit today and probably get a pullback there or something to that effect. So what happened is, we opened up, popped, hit it, and then reversed so far. It's, in the scheme of things, it's nothing huge for a swing trader, and you probably shouldn't try to micromanage that. If you positioned long recently to game a bounce that may come up to some of these additional targets, fine. But if you're an active trader, like I said, these are the levels I put out on the recent update. You have a gap below. If you're new to trading or investing, know this, that gaps are natural levels that act as support and resistance. So when you have a gap, like today's gap, for example, that's today's gap, there's two support levels there. You have the top of the gap or the bottom of the gap. So those are your first objective levels to add back long exposure. And I'll say this, if that's where the buyers step in at the first level and start to rally it up, and especially they take out that 176.75-ish level with conviction, then that's pretty bullish. It means they stepped in aggressively and early. If they let it come down here and they step in, it doesn't mean that we can't go up. It just shows you that there's more selling, profit taking at the earliest target. And then finally, let me say this, because again, it bears repeating. I said it in last night's video. I believe that on QQQ that the range I had, I boxed it in on both QQQ and SPY and said, I had a target range where I'll be looking for this bounce to end and possibly scale back into swing positions. I'm not doing it yet, but this was the lower end of the range. If this is all we get out of the bounce, a lot like I was talking about on the way down here, where all the pullbacks to support or the rallies were getting sold into very early at the first resistance level, how bearish that was, and that kind of kept that was a trend until it wasn't. So right now, again, I'm favoring more upside. I won't mix words, but I'm open to the possibility, and I'm not going to get married to the longs that I do have. And I've been actively trading in the trading account, but even then trading around longs, those like Intel and Apple, even though it hit that unfortunately the misplaced stop for the official trade, and other things like that, semiconductor stocks, etc. I'm still looking for some more upside here, but if we start to go down impulsively, and that'll be the sign. This is what I wanted to do the video. That's what you want to look for. How do they treat the gap? Do the buyers step in at the top? No? Okay. Do they step in at the bottom? No? That's fine. We still have a trend line below. But if we just start moving down impulsively, smashing through all those levels, the buyers don't show up, then that's not good. And at that point, I'll be more concerned about stopping out of the longs that I do have and have taken, added to back on the pullbacks and all that, than I am on, than I would be, on adding to any more long exposure. So that's where we're at now. Again, this is just a little fade at the opening, a little profit taking, but it wasn't, again, that was to be expected because those first targets were hit. Target levels and these resistance levels are areas where a reaction is likely. Let's look at SPY real quick, and then futures, and we'll wrap this up. So there it is. On SPY, we have the 60-minute downtrend line. We had the 282.40 target get hit this morning on the opening pop. We never had that pullback scenario last night. That was my preferred scenario, but I believe I said in the video, if that didn't pan out, if we just went up and popped these in the morning, then you would be looking at a likely pullback. Really pretty much the same thing I said on the euro, with the euro US dollar breaking out of that wedge. That's what I'm looking for there. Because anytime you have, that's an important thing. A lot of eyes are watching this downtrend, and don't get me wrong, right now it's still bullish that we took it out, even though we're pulling back. But when you have a resistance level, price resistance just above a downtrend line, you can't go crazy on that breakout, because there's a good chance you're going to get a reaction and then a back test. So right now, let's keep it simple. There's a back test. If that back test doesn't hold, that's not the end of the world. We still have, and that back test, actually, look at this, perfect. It's right, also very close. I don't know if it's exactly a backfill, maybe a few pennies shy of a backfill of, not a backfill, I'm sorry, a test of the top of today's gap. Again, the gap is that space between yesterday's candle and today's candle. So that's what you're looking at. Support 1, we're on it right now on the trend line. Support 2, top of the gap. Support 3, bottom of the gap. And then that 280 level is still big. So hard to say, but there's a range, and it's not a very big range to either. It depends on how where you think the market's going. But if you're looking to buy long, if you think there's more upside in the rally, you only have about another 0.3% downside to where this pullback should hold. And if it doesn't hold, if it goes much below 280, especially a big solid candle down below it, a red candle in the close, that's not good. And it's actually very bad, because we could continue down, and this could be it. When I say it, just like this, remember this rally back here? Yep, looks about the same, doesn't it? About equal in scope and all that. Although I'm going to say something. This one would be worse. Why would it be worse? Because this probably charged up a lot of bulls, bought in a lot of dip buyers, squeezed out a lot of shorts, and with the breakout and everything else. And that would, as I say, fewer things in trading or investing are more bearish than a failed long side breakout. So yes, lots of scenarios there. I can't tell you for sure which one's going to happen, but I can tell you where this starts to not look good again, and that's below 280 on SPY. Let's go to QQQ, because that's where a lot of my focus is. Here's QQQ again. I just said it earlier, the gap right there. We're entering the gap in QQQ now. So look at the bottom of the gap, and there's some price resistance there. I'll add that line there, about 170. About 174.95 or so, maybe a little bit below that. And then of course you have the downtrend. Now this downtrend is a little scary. Why? Because it's a little more steep, the slope of that downtrend line. Well, what does that mean? Well, when you backtest a downtrend line, if the slope of the line isn't very steep like this, then you backtest it. If you happen to backtest it for a few more times, it's not that big a deal. You're not moving down much in price. The steeper the trend line, the lower the price comes in every minute, every day. So if you test it for a while, that could cause a lot of pain if you're buying the back test and you're going to hold and allow for an additional back test. So again, not crazy about those steep downtrend lines, getting the back test on those. Prefer to see a more normal sloping line like this one here. For example, broke down, there was a sell signal, back test wasn't too much higher than there, so if you shorted the breakdown and added on the back test, no big deal, your cost was close to the same. But had that been much more steep, even the initial back test would have been much higher on price. And of course the futures, NQ, E-mini. So you can see that we struggled pretty much all night. We ran up and hit that 72.16-ish resistance. Struggled, tried to pop it early this morning briefly, but they failed that so far. But as of now, we took out the trend lines. So we're back testing that downtrend line. I had two different trend lines. Either or could be just as valid. So we're back testing the first one. That is an objective level to add, as would be that second trend line. And then maximum pullback, really QQQ should hold. And I'll tell you, it won't be good if it comes all the way down to 71.26 because that would that could take us below that trend line. If it does it briefly, that's okay, but let's just say that that's sort of the danger zone, if you will, for this rally. It does kind of mesh with that inverse head and shoulders scenario that I did last night, but it's a pretty significant level. And again, if we go much below that, you're also going to you're going to have lost these trend lines, so that wouldn't be good for NQ. ES, where's ES? Same story. Here's your breakout. We went up, consolidated around the trend line, had a little pop above it, and so as I said, if we didn't have the pullback first, we went and popped through these this morning, which we did, we're probably going to come in and back test them because that's just too much, too fast. It's just when you have a breakout of a level, if you want a sustained breakout, what you want to see after a very strong run up just to get to the breakout point or the resistance level, you want to see some consolidation. Why? It works off the overbought conditions. But when you break out and you're already very overbought on the near term, this is near term indicators, 60-minute chart, 80 RSI, 80 plus RSI, that's very overbought. There's not a lot of upside usually. So therefore a breakout that occurs with an extended run just to get to it, most often, I'd say 90% of the time or more, you're going to have to come in and back test that level before you continue higher. So I think that's probably what's going on today, and come in, back test it, 2800. Again, I said 280 I think on SPY, 2800 on ES, the S&P 500 futures, and that gives us another it's hard to say, it's hard to measure here, I really have to zoom in, but not that much more downside. So that's what I'll be looking for today. And make no mistake about it, the intermediate term trend is bearish. So these levels don't have to hold, and it's that simple. If you're an active trader, again, you want to step in, you can buy here, you could have bought yesterday, but I'll be clear, I don't think you want to keep buying if that level goes. At that point, even if you're going to sit tight because maybe you had some good entries here the other day, you might not want to keep adding to those positions. You might want to wait to see the bullish case firm up a little more with a reversal off that level. At least that's the way I see it, and that's the way I plan to do it. All right, I think that's about it. Since I'll keep this one for members, I'm going to just touch on gold. Lately, I know there's a lot of interest, and I've been covering it actively, holding off, just trying to be a little extra selective on the official trade. To me, it's all about the US dollar, and my preferred proxy for tracking the dollar. You can trade the dollar index, that's fine, but I like to look at Euro USD, among other things. I'll also look at the dollar index. And there's that breakout. And I had two alternative trend lines, with this white one probably being more significant. We broke out yesterday, but as I've been saying, the problem with that is, or not the problem, my expectation was we had a significant resistance above at 113.056, and then we pretty much hit it today. It's a high of 113.059. Three, was it not even pips, or yeah, 3 pips, close enough for government work, and so we've reversed off it. Doesn't mean that level's not going to go. I think it'll go, but like I said, hit that, come in a back test, and then go on. So this morning I was able to, get a short out on gold real quick on GC gold futures. Not to the site. I'm sorry, did that person because that level was hit there. I was trying to get that pre-market charts I'm watching out, and it just took forever getting those Bitcoin charts together. So let's show you gold again. This is just a recap of what I showed you in the in this video for many weeks now on my weekly chart, longer term scenario. This is our downtrend line. And it forms a big symmetrical triangle, and I'm doing this again for those of you new to the site as members, because this stuff is not covered on the YouTube channel. Gold analysis is strictly for members. That's it. We have breakout. We back tested, and even before the breakout, I was looking for a breakout and an upside, and I still am. And I'm looking for a move up here to the 130 level. It's a big level. I think we'll have a little reaction there. Whether we have a reaction or not, once we take it out, I see a pretty big move, a very big move in gold, up to about 151. It's not going to happen in a day or a week, but that's where I think we'll go. And so at that point, and it really sometime soon, we'll probably have gold as an official long trade before we even get to that 130 level. I'm just watching the euro right now, and the US dollar as well. So probably getting close, but keep in mind that gold is a flight to safety instrument. And I wanted to actually add to that too. Somebody yesterday in the trading room inquired about shorting. To contradict what I just said, I just took a quick trade, which I might be out of by the time I'm even finished with this video if my target's hit. But I didn't. Yesterday I said no, you don't want to probably short gold, at least not as a swing short, because of the fact that the euro was poised to break out, and that breakout looked imminent at the time. And so therefore, where I'm going with this, even if the stock market does rally, if we get these pullback levels hold, we get a little more upside, gold can still rally too as well. So make no mistake about it, gold has broken out. It broke out of that triangle, the falling wedge. Here's what it looks like, or the euro on the weekly chart, and that's pretty solid. So all I was looking for is a pullback, and we pretty much already got it today. We might get a little bit more. There it is. We pulled back off that level. We can come back in, test these trend lines, test the lower one, or we can push on through it. We had the initial reaction. That's what I say is very often when you have a well-watched resistance level, the initial tag of that level, the first tag in a while, we haven't touched it since here. So this is the initial tag, often produces a reaction. So that's the reaction I was looking for. Gave it a little pullback in gold so far today. Could be a little bit more, and here's where I'm going with this. If the stock market can hold support here on these levels I just showed you a minute ago and have another thrust higher, it doesn't necessarily mean gold must fall, because the euro and the US dollar can impact that more, but it will face headwinds because it's been a flight to safety trade lately. So if the market starts to rallying, the same folks that sold their stocks and put it into gold will take it out of gold and put it back into stocks. That's the whole flight to safety thing. It works both ways. So like I said, I would certainly not do anything but just quick short trades. In fact, I'm going to wrap this video up and try to manage my own trades right now, and I'll follow up on gold and the gold mining stocks. I know there's a lot of interest. Bitcoin, there were quite a few questions in the trading room lately, and I haven't heard much. I had a couple people that were long Bitcoin and interested where to go, and that's giving my thoughts. I said back here, come and hit this wedge, come on up, make one more marginal new high, and then would give us a bearish rising wedge, which it did. And that wedge broke down, back tested. There's an example of a back test that just went on for a little while, but it continued to back test and then finally rolled over, and that's it. So boom, hit my first target where we overshot by a hair, bounced, and I still think Bitcoin's going down here at least to this level. It's got a big old gap to test the top of, and if it enters that gap, and it wouldn't surprise me, I'm probably leaning that way, continue on down here at about 64.27 or so. That's Bitcoin futures, guys. Bitcoin futures, that's the only thing I'll trade, because I know there's all these exchanges. I'm not familiar with those other means to buy Bitcoin, and I don't trust companies that aren't regulated. This is a CBOE. So you know that if you have a transaction or anything, it's legitimate. Bitcoin moves fast, the Bitcoin futures, or of course Bitcoin prices. And I think I said before, I've said it many times, if that you don't have futures, GBXT, GXBT. I'm trying to no, that's the futures. GBTC, that's what it is. Going from memory here. That's a Bitcoin trust. It's similar to an ETF. It's like a closed-end fund. And so far, that's been good for, since that divergent high there, about a 29% drop. And this one's actually coming to support. And sometimes you get a tail wagging the dog thing where if money's coming into this, that might, if enough traders are trading this and they step in and buy that level, you might get a bounce. So therefore, as I look at this chart, that would make me second guess Bitcoin futures going to fill that gap. Of course, if this level holds right here, 882. So that's that. Let's wrap it up here. Let me get this video out to you guys, and we'll see how things go today.